In the dynamic world of financial markets, Monday, August 21st, presented a mosaic of developments with global implications. Monday marked the continuation of a challenging period for Chinese stocks, as they sustained losses for the seventh consecutive day. This represents the longest losing streak since June 2022. Meanwhile, European stocks showed a diverse performance, with the energy sector leading gains. Looking ahead, the week promises a relatively quiet stream of economic data. However, all eyes are on the upcoming Jackson Hole Summit scheduled for August 25th. Investors are eagerly awaiting insights from Federal Reserve Chair Jerome Powell and European Central Bank President Christine Lagarde. Their remarks are expected to shed light on economic conditions and potential rate strategies. European natural gas prices surged, driven by concerns over a potential disruption in Australian liquefied natural gas (LNG) exports. Meanwhile, crude oil prices enjoyed a three-day rally. This rally was propelled by a combination of a more robust physical market and a stabilization in the ascent of the US dollar, USD, despite lingering concerns about demand. European equities, notably major energy players like Total Energies, Shell, and BP, saw a surge in share prices. This rally was underpinned by escalating crude oil and gas prices, influenced by supply-related worries. U.S. futures held their ground, displaying stability even as trading volumes remained subdued. On the other side of the globe, Asian stocks painted a different picture. The Hang Seng Index experienced a sharp 2% decline, while mainland China stocks slid 1.4%. The source of confusion emanated from China's mixed reactions to its property market challenges, amplified by unexpected adjustments in the loan prime rate. Bond yields made headlines by soaring, propelling the trajectory of the U.S. 10-year Treasury yields to levels not seen since 2007. This upward movement follows a recent sell-off in the Treasury market. Investors' concerns heightened due to worries about sustained inflation and imminent policy tightening. This sentiment is accentuated as central bankers prepare to convene at the annual Jackson Hole gathering. Expectations are rife regarding Federal Reserve Chair Jerome Powell's stance at the Jackson Hole event. Analysts predict a balanced outlook, hinting at a potential conclusion to the rate hike cycle, while underscoring the necessity of maintaining elevated rates. The initial optimism in equity markets, driven by hopes of a soft landing for the resilient U.S. economy, faced headwinds from recent surges in bond yields, resolute statements by central bankers, and a more uncertain economic outlook in China. Oil prices maintained their equilibrium, with Brent crude hovering near $85 per barrel, while WTI traded within the range of $80.50 to $81.50 per barrel. Gold experienced a slight uptick, nearing $1,890 per ounce in anticipation of the Jackson Hole Summit. Commodity prices enjoyed a reprieve from the USD's rally, although they remained pressured by elevated U.S. Treasury yields and concerns about Chinese demand. Key events for the week include Germany's Producer Price Index, PPI, which has already been released. Notable earnings reports are expected from BHP Group, BHP, from Australia and Zoom, ZM, from the United States. The week holds significant events such as the existing home sales report and a speech by Austin Goolsbee from the Chicago Fed. Additionally, economic data from the Eurozone and UK, as well as the start of the annual Economic Policy Symposium in Jackson Hole by the Kansas City Fed, are expected to garner attention. The week concludes with crucial events like Japan's Tokyo Consumer Price Index, Germany's IFO Business Climate Index, and the Jackson Hole Conference featuring speeches by Fed Chair Jerome Powell and ECB President Christine